Okay, so thank you very much, guys, for joining in. My apologies that we just could not have the class yesterday, but I just skipped the class today because I thought that it is going to be important that we conduct the class today, and maybe we could have the next session tomorrow also. There is one thing that I want to actually go about today's session. I originally wanted the session to be a bit different, but now I want the session to be a bit different. So, do you people? I mean, like SN Raza, he seems to be very much concerned about one of the specific issues, which seems to be the issue with respect to how the issue costs are going to be accounted for. So that's one thing. Now, if there are other issues that any one of you has, do let me know so I can actually answer those also. So what I would rather do today is that instead of doing the examination question, I would be focusing upon the queries that you people have and would be discussing those queries. Ijaz bhai, motivational words, the most important motivation is that I start studying. You know what? There is nothing better than a start studying. You see, that's the best motivation because the more you start studying, the more confidence that you get. And that's the best way to boost up your energy, boost up your confidence. So, anyways, okay, Esan, what is your issue? Kindly resolve my query, which is regarding issue cost in APV. Now, what is that? What is that query? Do let me know what is that query. What are you asking? You can unmute yourself also in case if you want. You can unmute also in case if you want. What is Islam? Yes, please.
सर कैन आई स्पीक इन उर्दू?
हाँ बोलो
सॉरी
बोलो 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 बोलो.
सर, मैंने सब में 3 क्वेश्चंस मैंने रेज किए थे रिगार्डिंग इशू कॉस्ट से रिलेटेड। एक तो
Mm-hmm.
ये है कि आपने ट्रिपल टीम वाला सवाल करवाया था, एक गुणन वाला करवाया था और एक रॉक्सन वाला।
Mm-hmm.
मुझे ये समझ में ये नहीं आ रहा है कि इशू कॉस्ट जो है वो ग्रॉस अप कब करेंगे,
सही
मतलब
है
कब करना है कब नहीं करना।
सही है. ओके
और
ओके.
ये है कि कौन सा सेंटेंस जो है इसको मुझे
Mm-hmm.
अजम्पशन लेके चलना है कि वेदर टू ग्रॉस अप और नॉट, क्योंकि
ओके.
एग्जामिनर आंसर में जो है वो ग्रॉस अप किया हुआ है।
Mm-hmm.
और इन्वेस्टमेंट में कौन सी हम ऐड करेंगे, वर्किंग कैपिटल ऐड करेंगे या नहीं करेंगे जीरो पे।
Okay. Okay.
थैंक यू।
Okay. So basically, SN Radha is asking majorly his questions are just a second. Huh? Okay. Now let's see. So basically, SN has got queries with respect to how do we actually account for these issue costs with respect to the APV or the NPV with respect to the APV. Let's just start discussing. See, what happens is that generally speaking, what happens is that the examiner would use one of the terminologies, which is entity has resources available to pay for issue cost and working capital. So in case if the entity has got resources available to pay for the issue cost and working capital, this would actually mean what? This would actually mean, let's say if you need $100 million and if the issue cost is 2%. So what happens is that the loan that you would obtain is going to be 100 million. That's one thing. The loan that you would obtain is going to be 100 million because the entity has the resources available to pay for the issue cost. That's one thing. Now let's move on to the second one. The second situation is that it says that the examiner at times would say that he's being very silent that the issue cost of 3% are applicable. Issue costs of 3% are applicable. Now, if he says that the issue costs of 3% are applicable, so what are you going to do with respect to it? Generally, the examiners answer, they assume that entity does not have sufficient funds to pay for the issue cost. Generally, the examiner would assume that the entity does not have sufficient funds to pay for the issue cost. That's what the examiner is gonna assume. Now, let's move a bit forward about this. Let's discuss about it. See, what happens is that this is what generally the assumption is going to be. Now, let's see. So, so what happens is that if you have to raise $100 million and if the issue cost is 3%, so what are you simply gonna do? You're gonna say 100 million is the net amount that we need. So X is gonna be 100%. So what are you gonna do? You're gonna raise this amount 100 million divided by 97%. So resultingly, what would happen is that you would say 103.09 million. What are you gonna do? You're gonna say 103.09 million, right? That's what you're gonna do. And then what would happen is that if you want to establish the issue cost is gonna be 103.09 minus 100 is equal to 3.09 million. So generally speaking, they assume that the entity does not have sufficient funds to pay for the issue cost. Now, what happens is that from the perspective of the examination, I would suggest that what you could do is that you could just mention the assumption that you have taken. I repeat, what you could do is that you could just mention the assumption that you have taken with respect to the issue cost, whether the entity has funds available or the entity does not have the funds available. That's what you would have to do. SN, is it making sense now? Is it clear to you now?
Yes, sir. I've cleared that. Last, I have to ask question whether for interest calculation, can we multiply on this amount only 100 million for interest calculation?
Okay. Um,
Yeah,
yes, you see what
yeah,
with the
or
past
we have to
examination
add working
solution.
capital.
No, the past examination solutions have been like this, that they do it for the on the basis of the 100 million that they calculate the interest.
Okay. And last question I have to ask that it's for 100 million in 100 million we have to add working capital also investment also you have to take the assumption
No, no, no. It's
that we have
generally
to.
assumption that they have the sufficient cash available to pay for working capital unless and until the examiner says something in the question they don't know that they don't have the money and things like that.
So we have to we take
Ignore,
assumption that.
ignore. You have to ignore. Yeah, you have to assume that they have the sufficient money to pay for the working capital.
Okay, okay, thank you, sir.
Okay. Now, I've got Ijaz Ahmed asking a question. Please, depreciation like in NPV main different ways से calculate. Okay, now let's just see. For example, you have got an asset and that asset has a cost of 100,000. The depreciation is at 25%. The residual value is expected to be zero. Project has a life of project has a life of 4 years. The tax rate applicable is 30%. Now there are two ways of doing it. Number one of them is like what you do is that 1, 2, 3, 4. Let's say you have got profit before depreciation of 200,000, 250,000, 300,000, 250,000. Now what actually happens is that what you will do is that you will do depreciation. Now depreciation is going to be 100,000 into 25% is 25,000. Next year it is gonna be 18,750. Then 14,063. For this one, what you need to do is that there is going to be a balancing allowance calculation. How? You would say there is a cost of 100,000. The accumulated depreciation is gonna be 25,000 plus 18,750 plus 14,063. The accumulated depreciation is gonna be 57,813. Hence, the net book value is gonna be 42,187. 42,187. So what would happen is that you would claim this 42,187 as a balancing allowance here. The profit before tax is gonna be there. Then what would happen is that you would apply tax on it at the rate of 30%. And then whatever depreciation that was being deducted, you'll add it up. So let's say, for example, I'll just do a calculation for this. 42,187. Now let's just see. The cash flow is gonna be like this. I'm just doing the total cash flow calculation for 1 year, 147,500, because I just want to show you, I just want to demonstrate to you that how different methods lead to the same thing. Now, what is gonna be the next situation that's gonna happen? What is gonna be the next situation that's gonna happen? Let's try to understand that. So basically, the next situation that's gonna happen is that you would say, let's say for the year one, let's say for the year one, you'd say the profit before tax and depreciation is 250,000, right? Sorry, 200,000. What happens is that you apply tax directly on it of 3%, so gives you 60,000 as the tax. And then you say tax savings due to depreciation. How do you calculate that? The depreciation is going to be 25,000. Multiply 30% by that. So that actually gives you 7,500. And resultingly, you would end up at 20,000 minus 60,000 plus 7,500, the same 147,500. So just look at it how these two different methods operate. Simply, you have to do the tax savings due to depreciation. Ijaz, is this clear? Lovely. Okay. Shahir Karim, you're saying that you have got good confidence over mergers, acquisition, and all that, and that you are struggling with corporate restructuring, writing theory, and the corporate restructuring SOFP. Okay, see what happens is that when we talk about, the corporate restructuring SOFP, the examiner would have generally given you the financial statement, assets, capital, liability. I would suggest to you that just try to do it in a double entry manner. Like for example, loan extinguish, shares issued. So what you should do is that let's say minus 30, say plus 12 if the shares are issued according to that. So what I would suggest to you is that just operate it like a double entry. Uh, Entry by entry, that what is the impact on which item, that's what you have to do. That what is going to be the impact on which item, that's something that you have to do. What are the specific issues that you are having, Shahir? Yeah, what are the specific issues that you are having? Chrysos and Conejo. Can you just share that what exactly are the areas that you are having problem with respect to Chrysos and Conejo? What are the areas? I mean, like, are you having problem in deriving financial statements, or are you having problems in deriving the value? What exactly is the problematic area? Just a second, please. Okay, I was just trying to identify, Shahir, this question. Can you just let me know which attempt is it? Or if you could ask any other question also. I'd just try to see if I could just extract a video on that. June 17. Okay. June 17, right? So let me just see if I can just access the question now. Papers, financial management, AFM, June 17. Okay, see, with respect to this Chrysos company question that you are talking about, let's just try to understand that what's actually happening. The purpose of the restructuring program is to simply obtain extra funding to expand mining and shipping business. Chrysos is having difficulty obtaining additional funding without having to pay higher interest rate. Now, what does it say? It says that machinery parts and manufacturing business unit. The smaller machinery parts manufacturing business unit will be unbundled either by having its assets sold to a local supplier for 3102 million after its share of payables have been paid. The smaller machinery parts business units will be unbundled through a management buyout and so on, so on, so. Okay, see, this is where the actual issue is. He says as part of the restructuring program, existing unsecured bond lent by VCO will be cancelled and replaced by additional 600 million $1 shares for the VCO. So that means what are you gonna do when you're gonna be preparing financial statements? So bonds are cancelled plus cash of $400 million to be received. Bank OD will be converted to 15-year loan. Plus it says that the other debt under the non-current liabilities will be repaid. The other debt is gonna be repaid. $1,200 million into the non-current asset that is to be invested. Now see what is happening. On the basis of the information that's being shown here, see this is what we have got. Now what could possibly happen with respect to this is that you would probably say that okay, if this is what the examiner is saying, so how would we incorporate all of this? So he says that in the equipment there is going to be 1200 investment. Uh, with respect to the equity, there is going to be additional 600 shares capital that are going to be issued. Plus, he was mentioning, see, the bonds need to be cancelled out. Which bonds? These bonds. So the bonds cancelled, $600 million shares issued. This is done. Plus, what happens is that cash of 400 million is to be received. Plus, what else is to be done? Bank OD is converted to long-term loan. Cancelled. And instead, long-term loan 1800. Other debt is gonna be repaid. $1,200 million to be invested in the non-current asset. Now, do you see point? I have not incorporated all the adjustment, but if I would actually do this question, I would do it like this. I would say that, okay, what's going on? Just bring about an amendment to that and just try to incorporate that simultaneously. Do you get my point? Okay. Who else has got a question? Okay, you have a doubt in question number one, Conejo. Is it possible that basically what happens is that, see, the approach that I've adopted in order to do this Chrysos company, just try to identify what's going on and in the balance sheet put in the appropriate factors. So automatically you'll be able to do it. And believe me, all the restructuring scenarios, they are going to be more or less like this. It's not going to be very different. If you apply the same approach to Conejo, you would find it easy to solve. If you would apply the same approach to Conejo, you would find it easy to solve. We'll consider 30. We'll consider 30.6. We'll consider 30.6 because we consider issue cost separately. We consider issue cost separately. We are already considering issue cost separately, so it's just that the loan which is being used for financing the business. Yes, you can. Shahir, you can.
Assalamu alaikum, sir.
Aslam, yes, please.
Sir, why we are not considering 3 million unless until the question is said that 3 million is being paid for sufficient cash, then we consider, then we add it. Am I right?
देखो इसमें ऐसा है, मेरी बात समझना थोड़ा सा। बेसिकली ऐसा है कि देखो, अगर आपको एग्जामिनर ये कह रहा है ना कि आपके पास यानी कि यू डोंट हैव सफिशिएंट कैश अवेलेबल, यानी जनरली अजम्पशन होती है कि सफिशिएंट कैश इज नॉट अवेलेबल। So what you
Okay,
would do is that you would be raising the finance, grossing up, right? So let's say you
okay.
raise 33.6 million. Now out of that 33.6 million, the 3 million is the issue cost. And on the issue cost, there is a separate tax deduction. There's a separate tax deduction that happens. You get
So
my
3
point?
million is working capital.
Is working capital. Working capital is not going to be subject to tax. I mean, are you raising 3 million from the bank or what?
Yeah, that's why I'm asking, I'm little bit confused on that. ठीक है, इसमें जो है ईयर जीरो पे 30.6 मिलियन है और 3 मिलियन ईयर जीरो पे 3 मिलियन है।
नहीं, तो 3 million उसने क्या बैंक से लिया है या उसके पास था?
ये ट्रिपल टीन वाला क्वेश्चन है, इसके अंदर ये लिखा हुआ है कि जो है सफिशिएंट कैश अवेलेबल है फॉर पे आउट द इशू कॉस्ट एंड कन्वर्टेबल लोन।
रिपीट करो।
सर, इसके अंदर ये लिखा हुआ था कि सफिशिएंट कैश अवेलेबल जो अवेलेबल है वो इशू कॉस्ट के लिए और कन्वर्टेबल लोन नोट के लिए, पे आउट के लिए इसमें लिखा हुआ
वर्किंग कैपिटल के लिए नहीं है। वर्किंग कैपिटल आप कह रहे हो कि वो रेज किया गया है।
है। हाँ, वर्किंग कैपिटल हमने वर्किंग की है इसमें। आपकी कैलकुलेशन, आपका जो आंसर्स है उसके उसमें जो आपने वर्कआउट करवाया है, सर वो अटैच नहीं कर पा रहा, मैं वो एक्सेल की शीट अटैच नहीं कर पा रहा
क्वेश्चन
उसके अंदर।
बताओ, कौन सी
ट्रिपल टी,
अटेम्प्ट का
ट्रिपल टी।
क्वेश्चन? क्वेश्चन कौन सी अटेम्प्ट का है?
अटेम्प्ट, अटेम्प्ट।
मार्च जून 18, थैंक यू याद भाई। मार्च जून 18, जून 18। ओके, ट्रिपल टीन कंपनी। The new investment will require immediate capital expenditure of 30.6 million. Tax allowable depreciation will be so and so, so and so. New facilities will also require an immediate initial investment in working capital of 3 million. Working capital requirement will increase for the next year. Any working capital at the start of the year 4 is assumed to be released at the end of the period. Okay. Now, see, यहाँ पे, I mean, it's clearly mentioned that they are considering financing 30.6 million using these. So that
ओके,
means what is going to happen is that for the remaining 3 million, the question is assuming that you have 3 million available with yourself. See, is clearly mentioning that it's only needed for the initial investment,
ओके, ओके,
right? It's being clear in the question.
ओके नेशन, ओके, थैंक यू सर, थैंक
Okay. Okay. How about others? Do you people have got any questions, please? Okay. Thiru, don't worry. I'm just going to open it up. Can you just let me know the attempt of Conejo? Can you just let me know the question of this Conejo? December 2017. Okay. Okay, what's happening with Conejo is that okay, financial reconstruction. It says the BOD decided. The BOD decided that financial reconstruction plan before making a final decision. The financial reconstruction plan would involve raising $1320 million. Okay, the new debt finance consisting of bonds issued at their face value of 100. Then the bond would be redeemed 5 times at the face value, so and so either buy back the equity shares at their current market price, which would be cancelled after they have been repurchased, or invest in additional assets in new business ventures. Okay. The forecast profit after tax is there, current share price is this. The non-current liability consists solely of 5.2% coupon bonds with a face value of 100, so and so, so and so. Now, what is the issue over here? The requirement of the question actually says that estimate the impact of the two proposals on how the funds may be used on next year's forecast earning, forecast financial statement, forecast EPS share, and forecast gearing. Now, see what happens is that. So, um, Conejo pays tax at the rate of 15% per year, and its after tax return on the new investment is estimated at 12%. Now, try to understand this. If I talk about Conejo company, he's asking for impact on how on next year's forecast earnings. How much investment is he planning to make? 1320. Profit after tax is 350 million. Increase in earnings is gonna be 12% multiplied by 1320. So it's actually gonna be this multiplied by 1320. Now this is actually gonna be 158.4. Buyback equity shares at the current price, which will be cancelled after they have been purchased. Interest cost is gonna be 1320 multiplied by what is the rate at which you will be issuing the bond? Are we being given this? How many years of bond is going to be issued? 5 years bond. What is gonna be the rating change? Has he mentioned anything? A to credit rating of triple B. Has he mentioned somewhere that what rate you will be issuing the new bonds? So what would happen is that you would have to calculate the IRR of this. You'd have to calculate the IRR of this. I'm assuming, let's say it is 6%. I'm just assuming that let's say this is 6%. 441.08 is what the earnings is going to be. Let's just have a look at this. See, you would say that PAT is this 350. The earnings are going to increase by 12% for 1320. The interest cost is going to be, let's say I'm just taking a rate of 6% and then tax savings at 15%. So you see how this is how you will get the revised PAT. Now, what else is there? The examiner says that one of the option is we are going to buy back the equity shares. So how many equity shares are there? Share capital is 400 million. Number of shares bought back is 1320 divided by 11. 120 million shares are going to be bought back. So if 120 million shares are going to be bought back, so currently we had 400 shares, this is minus 120. 280 million shares. $1.575 is going to be the revised EPS. What you would do is that you would compare it with the existing EPS. The existing EPS was 350 million divided by 400 million. 0.875. 0.875. Right? Do you get it? Do you get it? Yeah, do you get it now, Thiru? That how did I do it? Most welcome. Okay, who else has an issue? Best approach for the theory part is going to be Shahir. Just read the examiner's answer for the theoretical aspects of the question. Um, I think with respect to writing down the concise answers, the best way to do is that just list down the pointers. I think the best way to do is that just list down the pointers. Once you list down the pointers, automatically what would happen is that you would be able to do it well. Thank you, Shahir Kareem. Thank you very much. Yes, SN Raza, I will do it in one of the classes. We'll be doing it on the Excel, on the spreadsheet. Yes, Ijaz bhai. Okay, can any one of you do me a favor? I usually am facing a lot of issue while accessing the CB platform. Can any one of you just take out that mock examination on the CB practice platform? And if you could just convert this into a Word document, or let's say on the PDF. I mean, like, just take a snapshot of that, so that is gonna make things easy for me, because then I would just do it in the next class. When we have the next class, I would be able to do the question live in that. Because generally what happens is that I do plan to do the CB platform, but unfortunately at times it does not work out. So if any one of you could do it, it is going to be lovely. So we meet up inshallah, and what I'll do is that I'll do the mock examination live. Maybe it will take me two classes to do the complete mock, because in one class I could do question one, and in the other class I could do two of the questions. So that's what we are gonna do. I'll just confirm, Ijaz bhai. I'll just confirm. Don't worry. right? Okay. See you inshallah in the next class. And if any one of you could send me a mock, that would be great.